Hello, you are welcome once again to SMS lecture series. In our last lecture, we learned about the meaning of cost. We learned that cost is the expenditure incurred in carrying out an activity. We also learned what costing is, and we said it is the process of ascertaining costs. Then we also said that when we record these cost information and data in the books of accounts, we are doing cost accounting. Today, we are going to go further to look at the differences that are associated between financial accounting and cost accounting. But before that, we would have to also take a look at the advantages that cost accounting has for us and the disadvantages associated with cost accounting. Now, by the end of this lecture today, what do we intend to achieve? We should be able to state 4 advantages of cost accounting. We will also want you to be able to state 4 disadvantages associated with cost accounting. And then we would like to now look at the differences between cost accounting and financial accounting. So, what are the advantages of cost accounting? We discussed some of the things that we discussed as functions, some of them might be coming up here again. But in this time, it is a benefit associated with cost accounting. If you install a cost accounting system in your organization you operate, what are the benefits that you are going to get? One, we are saying that cost accounting will help you to identify profitable and unprofitable products. So we're able to disclose to us which activities in the organization, which profit products, which services are profitable and which ones are not profitable. This would help us to take decisions such as increasing products that are profitable in terms of production, or in terms of the unprofitable products, eliminating them or reducing the quantity we are going to produce. Cost accounting again also provides suitable data for managerial decision making. Now, all the data that cost accounting gathers is supposed to be tailored to a particular decision that one management wants to make. So management wants to take a decision on product costs. Cost accounting provide data concerning that. Management wants to take a decision on pricing. Cost accounting will give us information concerning that. These information would help them to take that decision that will be suitable for the organization to run effectively. So that is an advantage associated with cost accounting. Without a cost accounting system, you might never be able to get such information from management for managerial decision making. Now, it also enhances cost control. What is cost control? So, when we try to ensure or regulate costs to be within set limits, then we say we are controlling costs. So you estimate your costs, and then you incur these costs, or when the costs are being incurred, you ensure that it is within the estimates. So what are the techniques we use to do this? We call it budgetary control. Budgetary control simply means that you establish your budgets, then you have your actual results, you are comparing with the budget. The idea is that you want to ensure that the actual costs do not exceed the budgeted costs. If your actual costs are exceeding your budgeted costs, it means you are not putting up proper cost control measures. Are you following that? Then standard costing is also another technique. Here we are looking at the unit estimated costs against the actual actual cost per unit. All right. So all these techniques, that is budgetary control and the standard costing, would help us to control costs. And when you control costs, you'll be able to beat down it, and that will result in you making more profit. Let's look at some other issues. Now we are saying that it also helps management to formulate policies on production. Policies on production. Costs gives you that. How will it do it? It provides you the data that you would use to be able to take a decision on production. All right, that is a function of cost accounting as well as pricing. Now it also guides us to fix a price. So if we are able to determine our production cost, then we can add a markup, and that will result in a selling price. Cost accounting guides us to fix the appropriate selling price that will result in a better profit. Okay, then we are also saying that cost accounting helps management to prevent manipulations and fraud through the provision of reliable cost data. So it helps the management. You are able to prevent manipulations and fraud because we are able to have proper cost data. And when you have the proper cost data, you check to ensure that people don't overspend. All right, just some people would of course overestimate costs. Sometimes they bring in information, or they just, let's say in budgeting, they sometimes repeat some items that are actually not even necessary, inflating the cost. So what cost accounting will do is that it will give us the proper data, so we will ensure that these manipulations do not exist. Okay, so that is another advantage associated with cost accounting. Now, with all the advantages we have mentioned about cost accounting, it doesn't go without problems. There are also some disadvantages associated with cost accounting. One such disadvantage is that in installing a cost accounting system in an organization, it is costly. So an organization installs a financial accounting system and they have to bring in, so you need to bring in more staff, you need to bring in more equipment, and sometimes you need to have someone in charge. All these are involving monetary considerations. You pay them. So we are saying that it is very expensive to install and operate a cost accounting system. So normally big organizations will always want to go in because they are able to manage their costs. Remember, the concept of cost accounting is to be down cost, but if you have to bring it in, and that will result in you exaggerating or over your cost begins to rise, then it is not prudent to bring it on board. So that is one disadvantage of cost accounting. Then we're also saying that because we are talking about cost, management attention might be shifted to ensuring or beating down cost. And if your attention is all about beating down costs, you might compromise quality. And that's why we are saying that it may result in too much attention of management on costs. In the long run, if you are not careful, it can affect the quality of the service or the product you are dealing with. Are you following that? So that is a disadvantage associated with cost accounting. Then modern methods of costing may not be applicable to some industries. When we say ready-made costing systems, what we are saying is that they are already in the market. Okay, I've already made it. The system is there. You just buy. It's just like where Microsoft have their systems. People just buy and install on there. It's already made. That's a ready-made system. All right. Yes, but some industries, the way they are, you need a tailor-made industry. What's the name? System that will meet the particular need of that organization. And because we normally do not have some of these things available, it affects these industries that would need this tailor-made instead of ready-made things in the market. Then we are saying that another disadvantage associated with cost accounting is that the information provided from cost accounting system may not be fully understood or utilized if the organization lacks highly trained and skillful management. You have a management there, let's say, excuse me, not to denigrate anything, but maybe say your management is full of scientists. Their idea of costing, so you are working in the medical field, or maybe you are working with agricultural sector, where most of the managerial decisions are left in the hands of people with knowledge in agric and sciences. These people might not be highly trained and skillful to handle these cost data. In fact, it's very important to also state that sometimes even the accountants that are there might not be that skillful to handle such information. And when you don't understand the cost information, how do you make a proper decision? So your understanding of the cost information that is provided would help you make a better decision in the organization. Now, like I said earlier, some firms don't actually even need a costing system. It's not necessary for you. Why? Because even though it is good, it is there to ensure that you beat down your cost. Bringing it, if the benefits associated with it would far fall below the cost, then there is no need bringing it. Because the idea of So we are saying that the another disadvantage of cost accounting is that it may be unnecessary for some firms if you are a small firm. Okay, so if the firm is a small firm, it might not be necessary for you to handle. Okay, all right. So these are the disadvantages associated with cost accounting. Let us take a look at the difference between cost accounting and financial accounting. When we talk of cost accounting, what we are saying is that the cost accounting part is what we are talking about, looking at expenditures associated with activities in the organization. The financial accounting section normally deal in reporting financial data to stakeholders in the organization. So for cost accounting normally is an internal mechanism, it's an internal system. The financial accounting normally is there that deals with external stakeholders. So cost accounting is more of internal, whilst financial accounting is more of external. Cost accounting is not regulated, so it's not mandatory to operate a costing system in your organization. No. But with the financial accounting system, it is mandatory. If you are a company, for example, you must publish your account. Of course, now Ghana Revenue Authority goes around trying to estimate the taxes of businesses. So even if you are a sole trader and you are there, it's important that you have a financial accounting system that at least would help you know how much profit you are making. So for proper estimation, it's very important. So, but it is not, of course, that emphatic when it comes to sole trader. But for company, it is regulatory mandatory. It's a mandatory thing to do financial accounting, to have a financial accounting system within your setup. Okay, now let's take a look at these differences between them. Now we are saying that their cost accounting reports to insiders of the organization. So the insiders are those within the organization, the management specifically. It gives them information concerning costs. Then the financial accounting is the one that reports to outsiders of the organization, those that are outside or external stakeholders. So we're talking about shareholders, who are the owners of the organization. We are talking about suppliers. We can have your bankers. You can have regulatory authorities. You can have even students would want to have information about financial accounting for their purposes of learning. All these information there, of course, financial accounting will give you that. But the costing data, it doesn't go to you. Another difference between the two is that whilst cost accounting records are kept to know the actual and estimated cost of an activity, like we have been discussing, we want to know how much does it cost us, what is the estimate we have made, so we can make cost comparison. Unlike that, financial accounting, there it is about the performance of the business. Are we making profits or losses? What is our financial position currently? So it's all about performance in terms of finances of the business. That is what financial accounting records are meant for. Now, cost accounting also, it does not comply with the generally accepted accounting principles. We call them GAAP. Financial accounting, it complies. It must comply with the generally accepted accounting principles. Now, another difference is that with cost accounting, it reports on a section of the organization. So the cost accounting information will be recorded about an individual. It could be a job. It could be about a process. It could be about a service. But when it comes to financial accounting, it is for the whole organization. It reports on the whole activity on the organization. So it's all about the entire organization. Like we said earlier, there are no legal requirements when it comes to cost accounting reports. Nobody requires you to prepare your cost accounting reports. But when it comes to financial accounting, there is a legal requirement to prepare financial accounting reports. So these are basically some of the differences between cost accounting and financial accounting. Now we are beginning to appreciate that this cost accounting is a branch, a financial accounting is a branch. What is the difference between these two? We have been able to establish some of the differences that exist between cost accounting and financial accounting. So today, what did we learn? We learned about the advantages of cost accounting. We mentioned some advantages associated with cost accounting. We said that cost accounting will help us to disclose, it discloses profitable and unprofitable activities in the organization. We have also mentioned that cost accounting helps management to take decisions concerning fixing prices. We want to fix our prices. Cost accounting helps us to take a decision concerning that. Cost accounting also helps management or provide data to management, cost data to management to take suitable decisions, suitable managerial decisions concerning production, concerning pricing, all these things is the advantages associated with the use of cost accounting. We also said that no, it is not only the benefits that cost accounting provides to organization. There are also some problems, or we can say disadvantages or problems of cost accounting. What are some of the disadvantages or problems? One, we are saying that it is an expensive system to install in organization. It's expensive. If you want to put it, you need to get staff. That means higher wage bill. You need to pay them. All right. You need to get a space for them to operate. That means extra cost. So cost accounting system is actually expensive. Then we also said that it is sometimes even unnecessary for small organizations. If you are a small organization, you don't need a cost accounting system. All right, because the cost associated with it will be higher than the benefits that it will accrue to you. So why do you have to do that? We also said that overemphasis on the cost accounting, cost. When you overemphasize on it, what happens to it? If management overemphasize on cost, they are likely to lose focus, and this can result in what? In quality problems. We might not produce commodities of the right quality because we are emphasizing so much on cost. And we also talked about skillful management. If you are not skillful as a manager, you don't have the highly trained and skillful managers, you have a problem when it comes to understanding the information that cost accounting systems generate for us, and that becomes problematic. So these are the things that we've learned. We have also looked at the difference between cost accounting and financial accounting, and primarily we said cost accounting report to insiders of the organization, while financial accounting reports to what? Outsiders of the organization. We have also said that cost accounting reports are meant for, they are not mandatory. They are not mandatory. But for financial accounting, their reports are mandatory. You must prepare your reports. Cost accounting normally deals in sections. It can deal with the individual, it deals with the job, it can deal with the process, it deals with the service. With the financial accounting, it deals with the whole activity of the organization. When it comes to cost accounting, we are looking at actual costs, we are looking at estimated costs. Financial accounting is looking at the entire performance of the organization. So these are some of the differences associated with cost accounting and financial accounting. If you recall, the last time in our first lecture, we talked about some other things that are associated with these things, the branches. So it means that in the next lecture, we shall be looking at the differences that are associated between cost accounting and management accounting. What is the main difference between these two? Then we will also look at the difference between then financial accounting and management accounting. Sorry for the error there. The financial accounting and management accounting. That's what we'll be looking at. So difference between financial accounting and management accounting. That will be our next lecture, God's grace. So inshallah, we'll meet again. We have a discussion on these things. Thank you very much for listening to today's lecture, and have a nice day.